Hello, Oracles. Well, Tesla had their earnings released today, and the stock plummeted afterwards. We're going to get into why. It's just more of an explanation, not a bearish or bullish kind of video that we're going to go over today, just explaining why the stock moved the way it did based upon the information that we got from both the earnings release and the earnings call. So we'll discuss all of that in a minute. The time of this recording is down about another 7% after hours. And we're going to go over the charts a little bit, showing the gaps that are, as long as we hold steady, will most likely fill in the morning. So we'll go over all of that information, other information that they gave us on the earnings calls about what we can expect over the next year and going forward in the future as well. If this is content that you guys like, please hit that like button down below and subscribe. All right, so first things first, looking at the charts, we've got the stock on the day was down 2% and about that 7% down after hours. So again, we'll go over the numbers for the earnings in a minute and explain why we saw these numbers move. But we've got this gap that goes down to 231. If we hold as we are right now, when we open tomorrow, this gap will get filled. Now, don't forget, that also means that we will have a massive gap created on the way down. So we could fill that, and then we'll have that gap on the way back up to that $246 level. So we'll pay attention to that afterwards. Now, again, if we end up continuing to fall after this, we have that 213 gap down below us from here. And now, if you guys remember last week when we discussed this, we were discussing that we have that gap above us at that 289 level. So we had the potential to going up and fill that gap or coming down and filling the gaps below. We had been consolidating, as I had said, around that $250 level. And then we broke down. Looks like we're going to be filling the gaps below us before we fill the gaps above us. But don't forget, as we come down, that gap above us will most likely get filled at some point. Don't know when, but it'll most likely get filled at some point. So regardless of how much we pull down, unless there's something catastrophic going on with the company, we will go back up to that 289 level at least to fill that gap, most likely. Now, looking at RSI, we're at 60. That's still on the higher end of the range. 70 is overbought. We're not anywhere near that. And chances are tomorrow it's going to fall significantly with the drop that we have. But we've been seeing a cycle kind of going up and down. So we went from the oversold to overbought. And now we're probably going to slide down and maybe we get back to the oversold range and fill this gap. Just things to pay attention to. Don't know where it's going to go in the future, but just giving you guys the potentials of where we might be able to go based upon information that we're getting, based upon all the crazy things going on with the politics right now and all of that. So just remember, going into election season could be uncertain, could see some further pullbacks. And since Tesla did officially push off the robotaxi event till October 10th, we don't have any catalysts between now and then that are really going to kind of push us up in any way, shape, or form. So we kind of have to just wait it out and see what's going on. Now, right before the robotaxi event, we will get the Q3 delivery and production report. So that could be that catalyst that kind of gives us that boost into Q4. But Q3, don't really have a lot going on Tesla specific wise. It's most likely going to be all economy and macro environment wise in the election and all of that. You know, the Fed may be cutting rates in September, but it's 25 basis points most likely, won't be a lot. So I think we have a lot more negative catalysts ahead of us from the macro perspective than positive. So we'll just kind of have to pay attention to that one as to where the stock price is going to move in the near term. All right, so let's get into why we saw the stock price fall after earnings. All right, so Gary Black did a great job of breaking it down to the positives and negatives as to what he saw. And based upon this, the Q2 adjusted EPS of 66 cents. Now, Tesla did report EPS of 52 cents. Now, Wall Street estimates were 62 cents, and that's excluding the $622 million restructuring charge, and that's about a 14-cent per share change. So that's why Gary had it estimated at a 66 cents EPS, which beats. But based upon how it was reported by Tesla, it's a 52-cent EPS number, which is a 10-cent miss. Now, the auto gross margin, ex regulatory credits, was 14.6%. That was below Wall Street consensus of 16.2%. Another reason why we are seeing the stock down. Margins are huge for Tesla. So if Tesla is not going to be showing that they've hit the bottom for margins, it is going to continue to fall from here. Now, one of my thoughts that we had talked about previously were we might see margins go up based upon a whole lot of other factors that were going on over the last quarter between payroll cuts that they had going on, the incentives that were going on for all of the interest rates, but we didn't know what cost that was going to hit them with to make that all happen. Apparently, it was more significant than we thought. And I know Cybertruck isn't really a big number right now, but I'm sure that affected some of the margin cost because the cost of the vehicle is still high as well. So some of these are all going to factor into it. So where we thought we were at the bottom for auto gross margins, we clearly were not. And Gary Black also pointed out, as is typical for Tesla, the shareholder deck doesn't make it easy to exclude the $622 million restructuring charge, which was much bigger than the $350 million estimated in the Q1 10Q. Assuming the company's Q2 tax rate of 20.8% and fully diluted shares of 3.481 billion, we estimate the restructuring charge negatively impacted Tesla non-GAAP estimates by the 14 cents as he mentioned earlier. So true non-GAAP EPS is 66 cents, which ends up beating Wall Street's consensus of 62 cents. And the negatives he points out, in the outlook, Tesla forecasts that, quote, in 2024, our vehicle volume growth rate may be notably lower than the growth rate achieved in 2023, which was 38%. Wall Street is already expecting slightly lower volumes in 2024 versus 2023, a negative 0.3% year over year. So that disclosure doesn't add much. Q2 free cash flow of 1.3 billion was much lower than the Wall Street estimate of 1.9 billion. Free cash flow is huge. Tesla is still really good at this, but a miss is a miss, and that's not good either, especially when it comes to free cash flow. Regulatory credits of 890 million were about 450 million above consensus, which likely inflated Q2 adjusted EPS by 10 cents per share. Now, for anyone who has been around and following Tesla for any time at all, you know that regulatory credits are highly debated, and it's the fact that some people say that it's in there and it kind of that's the reason why Tesla is profitable. You can argue that a few years ago maybe that was the case, but Tesla is clearly profitable on its own. But this here, having that number coming in significantly higher than what estimates were, doesn't help their case in this quarter very specifically. So Tesla is still clearly very profitable on their own. They don't need the regulatory credits. But when you're looking at that, if Gary is factoring in a 14% EPS adjustment based upon the restructuring charges, but you've got the EV tax credits bumping it the 10 cents in the other direction, maybe it's really only a 4%, which is kind of then a meet at the 62 cents. And meeting is still a good number to be at. But when we see margins are down, you see a forecast of, not really growth when it comes to a growth company. That's not a good look overall for a company that's trying to grow year over year. And investors are looking to get themselves bumping up in their stock price, very similar to the growth that we see from the Magnificent Seven. Tesla's not near that right now due to a lot of macro environment factors that are going on. Most likely we will see that in the future by 2026. But right now we are not seeing that. And therefore, because Wall Street only looks out 12 months, the stock price is reflecting it. And the last thing I wanted to add was the operating margin, because we have been seeing that declining and then kind of bouncing around a little bit and coming back up. So we are now at an operating margin of 6.3%. Now, this is obviously nowhere near where Tesla used to be in the past, and we've been kind of declining a bit. So if you look just year over year, down from 9.6% to 6.3%, again, a really not a good look. But we did come up from the 5.5% in Q1, but we also did bump up from Q3 to Q4. So is this going to continue, or are we going to fall back down again in Q3? Time will tell on that one. And so some of the other takeaways that I got from the earnings call and what they had in the shareholder deck, just to briefly go over what was stuck out to me, and you guys can comment below what stuck out to you if there's something that I don't go over. Energy deployment is growing significantly. It's the highest it's ever been. Elon confirmed the 12.5 FSD that is coming out is going to be combining the city and highway stacks, which has never been done. Highway stacks are very old, so they're finally going to be combining the two together to kind of prevent a lot of the issues that they've been having. They said a lot of the issues they're having are more highway related now. So putting those two together should prevent a lot of that and help the whole entire system move forward. Also confirmed that the robotaxi unveiling is going to be on October 10th. And he said that they pushed that off because there's some things that he wanted to add to it. And this gave them a little more time to be able to put that all together. My other thought behind this was knowing what's going on with the election, things like that, knowing timing of Q3 most likely isn't going to be the most stellar quarter for them. If they're going to be putting this out right after Q3, maybe they see a decent number when it comes to production and deliveries. Maybe they're kind of boosting that and trying to get a strong Q4 momentum going. And we don't forget that the robotaxi platform is most likely going to be the same as the compact car. They didn't want to have any much of the Osborne effect going on because people know this. If they unveiled it in August, it could cause an Osborning effect. That is where people decide to not buy something because they're waiting for the next thing to come out. If they announced this in August and unveiled the robotaxi, people would think that is also the compact car, which is most likely true. But that might delay a lot of perhaps Model 3 orders until next year because of this. So they don't want to unveil it. He did announce that they will most likely be having this in production by the first half of next year. So if they're in production of this in the first half of next year and starting to deliver these, that's great knowledge to have, but we don't have any other information on it. We know it's going to be a smaller vehicle. We know it's going to cost a lot less, but we don't know what it actually looks like. And having what it actually looks like could cause that Osborning effect going on. So I think part of it is he may have wanted to prevent some of that from happening, because unveiling it in October isn't horrible. There's a lot of incentives they can give for people to get Model 3s for Q4 and then get people excited for Q1 and Q2 of next year with this new vehicle coming out. So I think he wanted to push it off for that reason as well. Of course, he's not going to announce that, but that was just my personal feeling on all of that. And then he did discuss Optimus. They are using Optimus in the factories at the moment, very limited task that they have going on. But he said version 1 of production for Optimus is going to be happening next year. It is going to be for Tesla consumption only, because they're going to want to work through the kinks on their own, any issues that they have. And seeing as they're using the same FSD software for the AI in Optimus as they use in the vehicles, they can work through it all on a humanoid standpoint versus a vehicle standpoint. And this way they can kind of work through all of the bugs there. So when they hit version 2 production in 2026, they will have it ready to be able to sell out to other consumers, sell out to most likely other warehouses where they're going to go first, is my guess. Similar to how Tesla uses it in their factories, other companies are going to say, hey, that's a very viable function that we can use in our own factories. We will take that on ourselves. So 2026, and of course, that's far down the road. So stuff like that isn't going to affect the numbers at all right now, which again is why the stock price continues to plummet. And somebody did ask when we're going to see the first unsupervised robotaxi ride happening. Elon took a very long pause, and he did admit he's been very overly optimistic in the past. So he doesn't want to give a very direct answer on this because he still himself doesn't know. But he started going into the data, and based upon the learning curve that they have right now from the data coming in, he said next year is highly probable that we will see the first unsupervised robotaxi ride. So that is what we're most likely going to see next year. Again, we've always been hearing from Elon, next year, next year, next year. Anybody who's been around for a while and you're a baseball fan, that was kind of what the Dodgers would say, wait till next year. And eventually they did win, but it kept on saying, wait till next year. And for Tesla and FSD and the robotaxi, that's kind of where we're at right now. Wait till next year. So we'll see if next year is the year it actually happens. And the rest of the call and the rest of the earnings was, basically, Cybertruck is ramping. Things are just moving forward as they had planned from a foundational standpoint and fundamentals. So while the numbers aren't all there because of, macro reasons, interest rates being high, other things that are going on when it comes to costs on the bottom end as they're developing and building a lot of the growth stuff going on, they see a long-term path, which has always been the plan. So you guys as long-term shareholders are on this path. You're looking long-term down the road. And we're not talking 2, 3, 4 years. You're talking 5 minimum, 10, 15, 20 years down the road. The potential that we see Tesla getting to in the future is what we're focused on. That's what I'm writing this out for. So in the near term, you may see that stock price go up and down as we have been seeing. But when you start looking at long term, things all of a sudden start to come to fruition. People then are like, oh, what's happening? We saw that happen for a few years back in 2020 with Model 3 coming out, Model Y coming out. Analysts and investors just couldn't catch up to the information. Of course, we pulled back significantly and, kind of retraced our steps a lot since then. But we go through those cycles a lot with Tesla. And I think we're going to end up seeing that again. Energy is going to be taking off a lot more. Elon touts that Optimus is going to be, a significantly larger market cap than even Tesla is right now, all by itself as a segment. So that could be huge in the future. But how far in the future is that actually going to happen? That's where your belief and faith in Tesla's ability to make this happen come in. Again, if you're a trader of the stock, a lot of the information you heard in the earnings call and what you saw in the shareholder deck, isn't really going to be anything great to look at. Maybe you want to short it because of the information you got, because in the near term, it's not looking all that great. You look at first half of next year with a compact car coming out, that's awesome news. but you still have to get that to volume production to actually see that hit the bottom line. That probably won't happen until at the earliest Q4 of next year or Q1 of 2026. So again, that's still 18 months away before we start really seeing that hitting the bottom line. Wall Street is like, that's great, but in the next 12 months, which is where Wall Street looks, it's not going to matter much. Even with the Fed dropping interest rates, it's so minimal that they're going to be dropping it. It's not like all of a sudden they drop it 25 basis points and Tesla sales start skyrocketing. Not going to happen. But you start looking out to 2026 and the timing of it. If you have the compact car coming out and it's at volume production, robotaxi, unsupervised rides start actually happening, and Wall Street can start putting a dollar amount to the robotaxi revenue that we can see. And at that point, interest rates will be coming down more significantly, thereby increasing Tesla sales overall, plus having a lower cost vehicle. That is where the sweet spot's going to be. I think 2026 is where we are going to really start seeing everything start taking off. If we get some information about numbers and things before then, maybe in 2025, maybe. But again, with the macro environment, maybe we hit a recession as well. So many uncertainties still in the next 12 to 18 months from a macro environment standpoint. But when you look at how Tesla is lining themselves up for all of this and being able to handle it, even if we do get a recession and everything pulls down, including Tesla, when we come out, I've said it so many times before, Tesla is going to be one of the strongest companies coming out of this. And that is a stock you are definitely going to want to be in at that time if this all continues to play out as it is. That's why I've built up my strategy for cash flow myself into my own portfolio so that over the next 12 to 18 months, I can rebuild that position back up to where I had it before. And chances are it may be at a better price than I bought it before as well. So thereby giving me a better cost basis and more profits. Again, nobody knows what the future is going to hold. That's my strategy. My strategy could absolutely change, just as yours should. And you should be a very agile investor. When you see information change, you should change with it. And when you see information change, especially on a fundamental basis, adjust your strategy with it as well. If you're going to go long term, doesn't really matter, as long as you see that the long term thesis is the same as you want it to be. But if things change and they change fundamentally, you do need to adjust with that. Or if your investing strategy changes, then you should change how you invest as well. That's kind of how it works. So otherwise, again, leave me your thoughts in the comments below, what you thought about the earnings call as well, what you think is going on for Tesla, if you're going to be buying at this price, if you think we're going to bounce and come right back up tomorrow, or if you think you're going to continue falling down. Thank you so much for watching. I appreciate all of your support. Have a great one.